We previously discussed using Dryrun's consolidation feature and how it can be used with multi-entity, multi-location files. We also talked about budgets and how they can be rolled up into master budgets to see the overall health of the organization. Scenario modeling in Dryrun, however, goes beyond creating separate scenarios to compare and contrast. In Dryrun, you also have the ability to duplicate scenarios and make adjustments and modifications to visualize different outcomes. This is particularly useful for decision making, as you now have the opportunity to clearly uncover pain points and risks, allowing you to make the right business decisions at the right time. One of Dryrun's very powerful new features is the ability to make adjustments on an account level. So when we're creating new what ifs and hypotheticals, that you can easily compare and contrast the two different scenarios. Let me show you an example. Right here, we have a cash flow forecast scenario. This is our baseline scenario. We have gone ahead and created our forecast. We're comfortable with our projections going forward, and now we're ready to start playing around with some drivers. And there are multiple ways that you can do this in Dryrun. The first one is, of course, to create a duplicate of your baseline forecast. If you click on the scenario settings, you will see the duplicate button. This will create an exact copy, but it will allow you to now play around with some different drivers or whatever you may want to model. You can rename the new scenario quite easily. And let's say that we will call this our best case scenario. Now, as I mentioned, there are a couple of different ways that you can go ahead and make adjustments. The first one is, of course, just adding on top of what you currently have. In our previous video, we saw different ways of adjusting forecast values. The first one is, of course, adding an additional forecast on top of what you currently see. And that is one of the best ways to create a new addition, or if you want to make an adjustment, but you want to see what you have added. You can very easily click on the account and you will be able to add to forecast to visualize, say, for example, additional revenue that you may have. You do have the ability of creating different repeating schedules, however you want to model, fully flexible, including a custom repeating schedule. If this is something that happens on a weird schedule basis, like every 45 days or every 4 months, or maybe even in the last Thursday of every month, you certainly have that ability. We go ahead and save, and that will create that additional revenue line item so that you can go ahead afterwards, go to the top and compare and contrast those two different scenarios based on that one addition. Another way that you can make adjustments is through the use of our dynamic adjustments. The dynamic adjustments, what that means is instead of just completely overriding the amount that you see or adding an additional revenue, this is something that you can do if you just want to model something really quickly, like say, what if my subcontractors' fees increase by 10%? The same way that we did by clicking on the account to make an adjustment, you do have the ability to completely changing the forecast amount, or you can do it by percentage, which once again, that is what we call our dynamic percentage adjustment. So now we're going to say what would happen if our subcontractors' fees increase by 10%. You do have the ability to create different repeating schedules or even have an end date if this is something that only happens for a very specific amount of time. We go ahead and save, and that additional adjustment will be added on top of the subcontractors, and you will see it just as if it was a new item as well, because we're making that adjustment. So that is another different way that you can go ahead and make adjustments on an account level to play around with different drivers. Of course, besides all of this, you do have the ability of adding manual items as well. So if it is something that doesn't fall within the chart of accounts or you want to group them manually, you do have full control of adding manual items and visualizing it via new accounts or new groupings, as I like to call them, whether it is by product line or customer vendor or even revenue stream, by deal, by project, however you want to group those new items. And by adding additional items, you're just creating more, you're adding more information to this best case scenario, which once again, we can go here at the top and compare and contrast exactly what that those two different business decisions would make, or those two what if scenarios. What if my sales increase by additional revenue? And what if my subcontractors also increase by 10%? So that is being able to add additional items on top of the forecast, and as well as using our dynamic forecast adjustments. Now, on top of this, you also have the ability of creating brand new scenarios fully manual. If you want to go ahead and say, start modeling projects, and you can definitely start adding manual items that will allow you to separate specific aspects of one project. For example, if you want to model any sort of specific labor costs or material costs versus any expected revenue in the future for this particular project, you definitely have the ability of creating a manual scenario and adding those values completely manually. And then afterwards, just as we did in the previous video, you definitely have the ability of merging or consolidating the two scenarios if you want to see exactly how this project would affect your cash flow on an ongoing basis. So just to give you a very quick example of how that may look like, we do have a project day scenario. Once again, this is going to be a fully manual scenario. We do have a cash start value, and that is if you have any sort of initial amount of money that is floating this particular project. You can always leave it at zero, especially if you're consolidating or merging scenarios, just to see exactly what that looks like with your current cash flow. But we could start looking at, let's take a look at perhaps material costs. If this is something that you have to purchase materials costs right at the beginning, and perhaps this is a one-time lump sum payment that you have to put down for this particular project. You can select specific due dates for this and enter that. Now, keep in mind that this is just very generalized. It's a very simple example of what this may look like. Now, for your recurring, once you have your materials, you're also looking at your labor costs. And let's say that this is something that happens on a recurring basis. It's something that you have to pay your contractors or whoever it may be. My apologies, we are in Canada. So we'll leave this as general recurring. You can also have the ability, you also have the ability to create new accounts if you want to group them separately. But let's say that for your labor cost item, we're looking at perhaps $10,000 on a monthly basis starting in February. We can go ahead and save that, and this is what it may look like. Now, let's say that perhaps you do have some cash starting that is floating this particular project. And let's say that you have, $50,000 in cash that is going to float this. Now, from this, you can see that the cash in has moved. But now from this project, perhaps you also want to start thinking about potential revenue. And the potential revenue that is coming from this obviously is going to come after the project starts. And we could say that perhaps your potential revenue is, $100,000 on a monthly basis. Once again, super generalized. I just want you to see exactly what this may look like. So now we have that starting point, how you start, the amount of money that you have available to float the project. And the cash in is, of course, your inflows, anything that may come in that you're expecting into the future. In the cash out, we have, one-off bills, one-time payments, something that you want to manage, that you want to keep track of as well, or maybe you want to make adjustments later on and you just want to have those grouped together. And in the recurring, this might be something that just happens on a recurring basis. Your overhead, your direct costs, completely flexible. You can also rename every single one of these sections. But by adding those 4 different figures, now we have a really nice little simple projection of what this project may look like. We have our net cash view, which once again, that is our profit view, whether we're profitable or not. And then of course we have our cash end view, which is our rolling forecast, cash rolling forecast, which accounts for that money starting in the bank at the beginning. And then once again, this is what this project looks like, but how does that affect our cash flow forecast? We can always hide scenarios if we want to make sure that we're just focusing on 2 specific scenarios. And then just as we did in the previous video, we can go ahead and consolidate. Consolidate is a read-only view, or we can merge, which allows us to make adjustments and changes later on by clicking on the forecast and combining the two scenarios, which will give us a unified view of what that project will do to our cash flow and what that may look like in general over here. So we have it in green, and this is what it looks like, and it's right over here. You can also go back to the net cash view. And once again, you can always hide scenarios if you want to focus on one particular scenario. So that is just one very generalized example of scenario modeling in Dryrun. There is no limit to the number of scenarios. There is no limit to the number of what ifs and hypotheticals that you can create. It's very simple to play around with drivers, make assumptions, make some changes, and compare and contrast your scenarios once again so that you can make the right decisions at the right time. That is it for now. So if you have any questions or would like to learn a little bit more, feel free to reach out to us. Thank you.